Last week, it became official. Folks started receiving their third stimulus payment. We've heard from the experts, don't blow it. Instead, turn it into something bigger. We'd like to welcome JJ Wenrich, certified financial planner and author of a great book for kids, which we'll talk about a little bit later. But JJ, it's good that you're with us. I appreciate it.
Thanks so much for having me. Excited to chat.
We've got to unpack a few things here. The difference between trading and investing and a beautiful thing called compound interest. But first, if you received a $1,400 stimulus, what should you do with it?
You know, it all depends on your situation. It's always that. It always depends. But if you're someone who hasn't set up an emergency fund, you haven't put some cash away for a rainy day, then that'd be the first step, is don't spend it. Make sure you have some money set aside for the inevitable rain that's gonna happen to you. So if you've done that, then you have some options, and it really just depends on what your goals are. You know, if it's money that you might want to use in a few years, then that's going to be different. If it's money that you think maybe I'm not going to touch it for quite some time, then maybe you can invest some of that money. So if it's a shorter term, you're going to need it in 2 or 3 years, then you probably don't want to get too cute with that. But if it's going to be something that you can leave alone for a while, then that's when you can really use that power of compounding in your favor and let it work for you.
A lot of people, I think, they would look at $1,400 and whatever we know from watching the movie Wall Street, and $1,400 seems like a drop in the bucket. Doesn't seem like a whole lot of money. But do you think it's a substantial enough amount that people can see some kind of return on it?
Oh, absolutely. And it's about perspective. You know, to some people, it might be a lifeline, and others, it might not be that big of a deal. Whatever it is, you can make it turn into something much more. And I think you kind of touched on something. There's a big difference between trading and investing. And you see things on like the movie Wall Street, or you get on TikTok or Twitter, and you see people talking about, oh, turn this 1,400 into 10,000. Yeah. And just remember, if it were easy, then everybody would do it. And if these people really could do it in that simple a fashion, would they really be out there trying to sell you a subscription service for $100? So just understand that there's trading, which is more of, buying, selling, and it's going to be closer to gambling. It's going to be gambling versus investing, which, millions of people that don't know very much about markets have been extraordinarily successful for a long period of time by investing, by putting money into quality things or just into the market and then leaving it alone. Just forget that it's there. You wake up and suddenly that, 10 years later, maybe that $1,400 is worth $3,000 or maybe more, maybe less. But you do that a few more times and suddenly you do have some significant money.
Right. So it's building on some of those gains. And you had mentioned TikTok. I mean, there's also Reddit, right?
Yeah. Oh, yeah, absolutely. How could I forget?
GameStop phenomenon. A lot of people, they had a stock with GameStop, maybe $60, and it turned into a few $1,000s. Now that was a bit of an anomaly,
right?
But given a bit more time, you could certainly see returns. Now, for the Gordon Geckos of the world that we are not, what are some of the services that you would recommend for people to be able to trust with their money and where to put it?
I'd say if it's, to start out, I would say, just start to read things, start to learn a little bit more about what is out there. You can start with Robinhood, which has gotten a lot of the news, but you're going to be pretty limited in what you can do. These days, what's nice is it's so easy is you can really access a brokerage account on so many different platforms, and they're not going to really cost you anything if you're doing it yourself, whether that be, Fidelity, Schwab, TD, Ameritrade. It's always about, what do you do with that money? Am I going to buy stocks with it? Am I going to buy, am I going to buy GameStop with it? And so it's important to just build the good habits of, all right, if I'm going to have some that's more of that mad money, that play money, that maybe I do put $60 or $100 into GameStop, that's fine. Don't make that your retirement plan. Take that $100 and do that, and then take $1,300 and put it away into something that's a little bit safer and more likely to be there for you.
JJ, in 20 seconds, can you tell us what compound interest is?
It's your money making money on itself, but then doing that again and again, and to where you're making money even on your gains.
So you could potentially do that with the $1,400 stimulus check. Before we go, though, I just want to ask you this. You wrote a great book for kids. Can you tell us what the title is?
Yeah, the title of the book is Teaching Kids to Buy Stocks, but here's the fine print. The subtitle is Stories and Lessons for Grown-Ups. So you're going to have to read it. You can't just give it to the kids.
Oh, absolutely. And I think we could learn a thing or two from that. I want to thank you so much, JJ. We're going to talk about that another time, including compound interest, because I think that's worth a segment unto itself. But thank you so much for joining us. Great advice.
Thank you so much for having me. I really appreciate it.
We're back in 2 minutes.